As India starts its G20 presidency, the world's fastest growing economy endures geopolitical change, making it pertinent to analyze what lies ahead. Times Network, through its flagship platform, India Economic Conclave, continues the legacy of championing the economic agenda of the country. The 9th edition of the India Economic Conclave focused on India as the emerging third superpower. IDFC First Bank presents the India Economic Conclave, powered by Google. Harnessed conversations to transform India's economic aspirations into action through specially curated sessions of thinkers, policymakers, economists, business leaders and global influencers. The event not only got to witness the thought-provoking idea towards the development of the nation, but also experienced an immersive performance by 3-time Grammy Award winner Ricky Cage.
Reach out, let us join hands and sing this world song. Reach out, let us join hands and sing this one song.
In this episode, Ajay Piramal, Chairman Piramal Group, addresses the animal spirit of entrepreneurship in India in a fireside chat with Managing Editor of ET Now and ET Now Swadesh, Nikunj Dalmia. And in the second half, in a panel discussion, Shankar Sharma, Managing Director of G-Quant Investec, Nilesh Shah, Managing Director of Kotak Mahindra Asset Management, and Mark Mobius, founding partner of Mobius Capital Partners, discuss India's long-term growth trajectory.
You know, in 2 decades of my television career, if there is one interaction I always look forward to is to interact with Mr. Piramal and understand very few simple things about risk, passion, and opportunity. The way Mr. Piramal has really connected these 3 things in his entrepreneurial journey, risk, opportunity, and passion, I think is quite extraordinary. I mean, he's got a range of experience from managing real estate to pharma, NBFC, lending. He pretty much understands the whole identification of entrepreneurship and what are the critical pillars for entrepreneurship. So, Mr. Piramal, I look forward to learn, understand, and all of us perhaps are looking to hear from you as to what your idea about entrepreneurship is. But before I do that, sir, I guess the world can be divided in 2 parts because of COVID. Before COVID and after COVID. And post-COVID, the world has changed. Especially for India, it has changed. India, it has changed. The entrepreneurship engine is humming. India has arrived as the go-to destination. So to your mind, as an entrepreneur, and for India per se, post-COVID, what has been the biggest change?
You know, I find that the biggest change post-COVID is really the positivity and the optimism that both people in India have and people outside India have. I mean, I meet quite a few people, investors and other businessmen from all over the world, most of them now coming to India. And let me tell you that the only thing they talk about is how the growth prospects of India are. And in fact, I probe them that what do you think as risks? So there are very few risks. And this is the first time in my career, which is 45 years now, that there is so much of optimism from all over the world, whether it's bankers, whether it is investors, whether it's other businessmen. This has never happened before. And the reason why, there is a real reason for it. One is, I think the way we managed COVID, whether for the population, for the economy, has been exemplary. I don't think any other large country has done what we did. You know, there was a shock at the first time COVID was. When the second time COVID wave came in, again there was a fear, ki kya ho raha hai? But I think the way we managed, whether it was the free food gain to 80 crore people, whether it was the direct benefit transfer of 2,000 rupees to each who was below the poverty line or the economically backward. I think the way the economy was handled by the Ministry of Finance, by the RBI, the way the vaccination and so on, I don't want to keep repeating, but we all know that. So I think that has given us a much stronger base. Look at it today, I think it's the first time, at least in 10, 20 years, where you find that the inflation in India is lower than the inflation in the developed world, whether it's the US, whether it's the Eurozone, UK. So that again is very different. The Indian rupee is been relative to all these currencies, whether it's the euro, whether it's the yen, whether it's the sterling, is stronger than the dollar. ये कभी हुआ नहीं है.
Now, for entrepreneurship to flourish, Mr. Piramal, you need access to capital. That's the biggest impediment for a country like India. I mean, our economy ultimately is capital starved. We are dependent on global capital. How do you see that changing in an environment when interest rates are normalizing?
So, I was hearing the previous speakers, Mr. Agarwal and the others, as well as there is a lot of optimism in India, but I think, and I don't want to repeat that because we all know it. I think let's talk a little bit about the concerns that we have. The only reason why I'm saying so is that we want to grow faster because this is the best time India has had. If you look at it, if India has to grow at 8% GDP, which is what our aspiration is, if you want to go to a 5 trillion and then 10 trillion, generally in real terms, if it's 8%, then when you want the availability, credit must grow at approximately 18 to 20%. For credit to grow 18 to 20%, it has never happened in India. And I don't think we have today, we do not have banking or the NBFCs or anybody who can grow it that much. So we are capital starved. And therefore, we have to work towards getting capital. There are many opportunities we can learn from what the rest of the world has done. So for instance, banks, or let's look at pension funds, provident funds, the ESIS, EPFO, all these are not allowed to invest in too many companies. With the regulations becoming tighter, better in India, I think we will have to open these funds available. Today, 50% of all these funds go into government securities. I think they must be allowed to be invested into companies. The second thing I find is that we need to get not only how do you raise funds today? A company does either from banks or from either you get public deposits or you can get bonds. Corporate bonds do not exist, so that's one area. Equity markets, we do not have enough equity options. Look at what happens in, let's say, other countries. Look at Canada. All their pension funds, whether it's CDPQ, whether it's CPPIB, we know all these funds, whether it's the GIC in Singapore, they are the ones who are using funds which are of the public and investing it in countries and getting a good return for their own holders of the pensions. So I think we need to do that. The cost of capital in India is extremely high, and we are becoming very, very uncompetitive. And I don't think we can reach a 10% growth unless we open this up. Also, I don't know what the hesitation is to allow giving banking licenses to private players. After the banking licenses which were given several years ago, now 2 decades, when you found the Kotak and the HDFC and all these IndusInd, there's been no major bank that's come up. And we've seen these have been successful. So why not you give it more? And now the regulators in India are they're much better there. So again, I feel that shortage of equity, shortage of debt is going to be our constraint.
Mr. Piramal, one of the unique advantage of India is that our corporate balance sheet and the retail balance sheet and the government balance sheet is not leveraged. Unlike developed markets, when interest rates, they go up and down, the leverage backfires. So at a time when the promise of credit growth is so good, should we start leveraging the economy? Because in a downturn, it will hit us because if you're foreign capital.
So if you look at it, the average debt in India to GDP is only about 55%. is the debt to GDP. In Asia, the figure is 150% is debt to equity. And always debt is much cheaper than equity. So we must allow more debt to come in. And that's why I'm saying open up the markets to debt. And why should individual savings be just left in public deposits or left in unproductive assets? This is where we have to have opportunities. That is the fuel for growth.
One question, if I may throw in before I get into whole acquisition financing, is that what is your understanding of the current credit cycle? Because everybody would like to hear from you. You understand risks, sir, very well. Where do you think this credit cycle is headed? Because we are already 2 years into this credit cycle of 15-18%.
Actually, the credit cycle has been benign for a long time. And I think in spite of COVID, you've seen that the credit cycle has been very benign. If you look at bank balance sheets today, the net NPA is at the lowest level. And there is, across the board, I think, thanks to a lot of the data that's available, whether it's, through all the digitization, the credit cycle has been good. So there is a concern that people feel that it cannot go on forever. But, I'm looking at it on a daily basis to see, are we getting any delinquencies or people are not paying up on time? It's not showing yet. And I think it's not only in our case, but across the board. So we just keep our fingers crossed. I just hope that because of the, all the CRISIL, the CIBIL data and all the other things, it should be in a better position.
How do you see the fintech space versus the traditional NBFC business moving?
I think it's very difficult to separate the two. You cannot say that a traditional NBFC does not have fintech. The only thing in fintech, and especially now with all the regulations that the RBI is coming with, they have to have a balance sheet. If they have a balance sheet which backs the technology, then it is a lending business. Just like an NBFC or traditional NBFC in your terms, I mean, we have probably 250 people who are just doing technology. So I don't see any distinction because that distinction cannot last. It's not going to, those who do not embrace technology on one hand will not survive. At the same time, fintechs, if they don't have a balance sheet, they will not survive.
Now, my last question, ladies and gentlemen, I've been wanting to ask this to Mr. Piramal for almost 10 years now. I'm glad I'm getting this opportunity today. And it's not a tough question, so no googlies from me. My simple question is, if Ajay Piramal of 2023 meets, if Ajay Piramal of 2023 meets Ajay Piramal 40 years ago when he started his entrepreneurship journey, and if you have to give an advice to Ajay Piramal of 40 years ago, what advice would you give?
I would just say that if 40 years ago, today the opportunities are huge, which actually are there every time. I think an entrepreneur has to be one who can spot an opportunity when others don't think there's an opportunity. That's the thing. So whether it is then or now, it doesn't matter.
So is Ajay Piramal excited, cautiously bullish, a term which every corporate uses these days? Or he is outright bullish about India's growth in the next 5 years?
These are things, I can say anything for public audience to make it sound good. But yeah, we are bullish. I mean, it is bullish. But one has to always have risk in mind. You can't be just bullish you can't be a bull in the China shop.
I started by saying that this man understands risk more than anybody else. We started the discussion with risk, and we're ending the discussion on risk. But really appreciate your time, Mr. Piramal. Thank you so very much.
Thank you.
Mark, how are you approaching this market? Indian markets are not far away from an all-time high. The Bank Nifty last week hit an all-time high. For somebody who's not invested in the market right now, according to you, how is the risk-reward ratio stacked up?
I think, one of the things we learned from this session we just experienced, this idea of consciousness and positivity. In other words, the power of positive thinking is so critical when you're investing. Because as you just said, it doesn't make any difference when you're going to be investing. It's a matter of being invested, because in the long run, the markets will go up. There will be periods of bear markets, yes, but in the long run, the bull market will be very, very fruitful for investors. So if you ask me, should we invest now? Yes, we should be invested now. And particularly when we look at India with this incredible growth, 7% growth for a population of over 1.4 billion people. This is an incredible accomplishment. And this, I believe, will continue going forward. So the best time to invest is when you have money.
So Nilesh bhai, party kyun shuru hui hai? Why do you think right now the best is yet to come for the Indian markets? Because historically we've seen economy and markets, they don't run together.
So let me give two answers, one lighter way, one serious. There is a small bank in Maharashtra called Shamrao Vittal Bank. There is a big, large bank called Silicon Valley Bank in US. SVB is the 16th largest bank in America. A day has come where our Shamrao Vittal Bank has to say, when you talk about SVB going into bankruptcy, that is that American bank, not the Indian bank. ऐसा दिन आपने कभी सोचा था कि इंडिया में आएगा? So that's the lighter vein answer. That's why you have to invest here. But on a serious note, the state from where I come, Maharashtra, today Maharashtra has a GDP which is equivalent to India's GDP in 2005. In 17 years, Maharashtra has reached where India was yesterday. 2001, UP and Uttarakhand were combined. Today's UP and Uttarakhand combined is where India was in 2001. And there are three other states, Tamil Nadu, Gujarat, and Karnataka. They are today having that GDP which India had in 2000. In about 20 years, these 6 states have reached where India was yesterday. Now, if all of us continue to work in similar fashion for next 20 years, these 6 states will create today's 5 India. And then there are 20 other states which are also doing something. This is the journey of 1 India to 5 India in just 6 states. This is the journey of 1 India to multiple India in terms of GDP growth over next 20 years. This is the reason why you should invest.
You know, I proudly narrate this example to everyone that when I started my television career in 2000, the profit of Infosys, quarterly profit was Infosys was 55 crores. Today, the quarterly profit of Infosys is about 4,000 crores. It's 23 years, 55 crore quarterly profit has become 4,000 crores. In last 20 years, what have we seen? We've seen 9/11, we've seen 2008, we've seen COVID crisis, we've seen taper tantrum, but the Sensex has beautifully gone from 5,000 to 60,000 plus. I guess that's the kind of timing we really are in. So Sankar, again, first let's get the headline Sensex. 4 to 5 years, do you see Sensex could touch 1 lakh?
Oh, I mean, I'm absolutely certain it will reach 1 lakh. Now, whether it happens in 4 years or 6 years, frankly, is really a meaningless debate. But looking at the nominal GDP growth rate, which we are looking, you can safely say we can grow between, say, 12 and 14%, maybe 10 and 14%. You will approximate that number, and if you compound it at that, so in 4 years, roughly from 60,000, you add another, say, it comes to approximately 1 lakh in 4 years. I mean, it's not a reach to see 1 lakh, just at the simple compounding of the nominal GDP rate. I think it's a given, 100%.
So guys, if you're not invested, abhi train nahi chuti hai. We had 60,000 on the Sensex, and 1 lakh in next 4 to 5 years. we are in for some amazing return in terms of what capital markets actually could do. Mark, Sensex 1 lakh in next 4 to 5 years?
Yes, possible. Because you look at it this way, generally speaking, if a country is growing at 7%, you can expect companies, reasonably good companies, to be growing at 14%, double the growth rate of the country. So it's very possible that you can get this incredible growth in the size of the market and the actual investments in the market, no question.
My next round of question, I'll keep it very simple again. The most overrated sector in India and the most underrated sector in India.
Probably the most overrated are the banks, to begin with.
Yeah, I told you.
And the most underrated are the medium-sized companies in a number of sectors. In fact, we've been focusing on those medium-sized
Mark
companies.
go for the same client meeting. He does not like banks, he likes small cap and mid cap. Yeah.
So,
And we live very close to each other.
He's also in Dubai, actually.
Yes, correct.
Wow. I'm making friends meet, I didn't know this.
No, my feeling is that the great opportunities are the non-indexed companies.
Shankar, same. The most overrated sector and the most underrated sector. You can't say banks. You can't say banks.
No. I mean,
Then
just
you can't
because
say
you
banks.
asked him first doesn't mean that the answer is taken, right? I agree. I mean, in my view, banks are Nilesh will disagree, of course, but that's fine. That's the market. But my view is it's not a sector where, at least I want to put my money in. But Nilesh is a large public money manager. He can't avoid, banks given simply the size of the weight in the index. But from my perspective, and I agree with Mark that, I have an investment in a company, a very tiny company, which is maybe around 300 crore, or maybe 400 crore market cap. And I think the net worth is around 45 crores. And March 23, the full year, they've done about 25 crores in PAT. And the owner was telling me that is still a lot lower than what he thought he might deliver. So imagine on a 45 crore balance sheet, he's delivering 25 crores in profit. He's saying there is room for going to 35. That's a 50-70% return on equity. I mean, it's phenomenal. No country in the world will give you numbers of this kind, without any doubt.
Yes. How many stocks do you broadly own in your portfolio, and what's your style of investment when you are investing in small and mid-cap stocks? What are the factors you look at?
I own a lot of companies because I believe that in investing and in investing in small caps in general, I don't want to be concentrated, because I would rather be diversified to begin with and gradually increase based on my confidence on the numbers in the business. Because there will be a lot of failure rate. I mean, it's not like the promised land in all the companies, to be clear. There will be failures, and I'm cognizant. I've been around for 30 years in this game. So I keep it fairly wide, maybe 25 to 50 companies, depending on the kind of the market we are in. And gradually, it's like a marathon. So you start out with 100 runners. I've got 100 runners, or not that much, but 50. And then the field will spread out. You will find a bunch of guys leading the pack, 5 or 7 runners. Then you'll clustering in the middle of maybe 10 guys. And then there'll be 25 bringing up the rear. You gradually eliminate those guys, bring the money back into the leaders and the midfield people, and bring in newer companies to join the race. And it's a constant process. Like I said, in a growth country like India, there are incredible, even IPOs, for example, some of them are now getting more reasonably priced. And you're making significant money even in IPOs. Leave alone the disasters of the Nykas and the Zomatos. I think people have learned their lessons. And now you're seeing more reasonably priced IPOs coming to the markets.
Just by quick final answer, the most overrated sector and the most underrated sector.
The most underrated thing is management and governance.
Most underrated sector.
सर सेक्टर में अच्छा प्रमोटर मिल जाए तो वो सोना बन जाता है, नहीं मिला तो people don't really give too much respect for it. They'll go and dabble in all kind of companies where neither they know the management nor they believe there is governance and end up losing money. If people start respecting management and governance, chances of losing money in stock market is very, very limited. The most overrated thing is to believe that there is a moat in the business. We are living in the world of disruption. कल जो चल रहा था आज उड़ जाएगा, आज जो चल रहा है कल उड़ जाएगा. We need people who are paranoid. We need management and companies which are always worried about the disruption coming. You have to invest in companies which are disrupting their own business model rather than waiting for their competitor to come and disrupt. Governance, disruption, ये दो चीज संभाल लो, you will make money in stock market.
Before I wrap this session, what me and Aisha do every day, rise with India. That's what you all should do. Rise with India. Indian stock markets, I think we have a long, long way to go. That's the essence of Nilesh, Bhai, Shankar and Mark. Thank you as always for joining us.
Thank you.
Aisha, back to you.